Okay, good day to you all there, folks. My name is Victor Akimbode and I've been trading for 5 years in the Forex market. I traded gold and some Forex pairs as well. Okay, so what I'll share today is basically theory. It's a process I apply daily in the markets. It's basically how traders like ICT made the markets very popular. So most traders overcomplicate Forex, but the truth is price action and market structure alone can give you all the edge you need in the markets. So in this video, I'm going to break down how I use this approach to trade confidently and consistently. So traders like ICT made this popular, but today I'll show you my twist on it. Okay. So by the end of this video, you should be able to understand how to read market structure. Then you should also understand price action. So price action is basically the pure movement of price on the chart, while market structure is how price creates the highs and lows. For what reason, or why does price create those highs and lows is what we get to understand that market structure means. Okay. Alright. So to just keep it simple, when we have an uptrend, we have the higher highs and the higher lows, which is, for example, the higher highs and the higher lows. These are the higher highs. Let me the text there. I have the higher highs here, and then and then right here we have the lower lows. Okay, while for the other way around, which is the downtrend, we have the lower highs, and then sorry for that, and then we have the lower lows here. Okay, so that's basically what we call market structure. Okay, why price action is basically explaining to us all that goes on within the market structure. All that goes on in here is what we call price action. In here, price action. In here, price action. Likewise, all that goes on in here is what we call price action. Price action, price action. Yeah. Okay, so price action simply explains to you what the market participants are interested in doing in the markets, what their anticipation is on a particular price of a commodity or an asset. Alright, so now price action and market structure is the foundation behind every single strategy. Okay, so even the smart money concepts is based on price action and market structure. So price action and market structure will help you to do these things that are listed below here now. Firstly, it will help you to, first of all, you need to spot a trend. Okay, and then secondly, It will help you with your time entries and exits. Those two are very important in the market, your entry times and your exits. Okay, and lastly, both of them will help you to avoid fake outs. If you know very well your price action and your market structure, trust me, you are going to go in the market. Those two are basically all every trader needs. Understand? So if you're a beginner trader or an advanced trader, you definitely need to know a lot about market structure and price action. I have a video on market structure in my channel, so do well to check that out. And also make sure you like this video and subscribe to my channel if you are enjoying this content and you want more videos like this. Okay, so now let me go to the live chart to explain to you how we use all this, to get a trace. So if you want to trade with just the price action and the market structure, the first thing you need to do is to, first of all, you need to identify the trend. Like I said earlier, identify the trend of the market. Okay, now what's the trend of the market at the moment? If we were to take a trade from here now, what's the trend of the market? If you look from the higher time frame perspective, you see that price has been bullish. So now we have our trend, and the market trend is basically telling us to look for buys. Then the next thing is we mark out our key levels. We need to determine our key levels so we know where exactly we want to enter and where exactly we want to exit. Okay, so we mark our key levels. Okay, so now if we were to take a buy from here, we mark our key levels is basically the highs and lows on the chart, and then we have the major one here, which is the highest high gold so far. Yeah, that's basically it, guys. So now we have our key levels, and the last thing you do, for those of you who don't know the key levels, I'll do a video on that to explain that as well. So just make sure you drop a comment below if you want a video on that. Alright, okay, so now I've marked out our key levels. The next thing is to wait for a market structure shift. We wait for a market structure shift. Now if we were to detect a market structure shift at the moment, with the current price action, we don't have a market structure shift yet, but let's deal with the past price action so we can see how we could have taken some trades in here. Okay, so firstly, we identify our trend. Now we know that our trend is bullish. Secondly, we have marked out our key levels. Now we wait for the market structure shift. Okay, so now for us to spot the market structure shift, the first thing we need to do is a break of structure. The break of structure must be seen on the chart. This was where the break of structure occurred. The break of structure occurred here. Another break of structure occurred here. That was one I took out. But that was a continuation break of structure. So if we were to take a trade at top, now we have our break of structure here. Okay, now a break of structure now, and then we have our key level here. You see, we simply wait for price to react back on our key level before we take our trade. And what did it do? Price came back after the break of structure. This is basically what price did. after a break of structure here as well, price came back, gave a reaction, grabbed liquidity, and then broke structure again. Price came back here on this candle, came further, grabbing liquidity and reacting on a major level, on a key level, and then went higher. So if we were to take this trade at all, we will have zoomed down to the lower time frame here to check what price was doing, and all we needed to see was some forms of rejection on our key level, which I'm pretty sure that something like that must have occurred there. Okay, so you can now see we had rejection candles painting there, but it was not that obvious. We had some rejection here and price finally came. So if I was to take this trade, I would have taken a buy right here. This is just an example. Okay, taking a buy right here, a fixed stop loss that I use personally, so which is 30 pips, and then I aim for 1:3. Price even went further than that. Okay, so that's for me. But if you were to trade due to structure, this high will have been our take profit area, which was 1:2.5, which is still fair enough though. Okay, so if we miss this trade, we could still take another trade again, which is a break of structure now. Okay, so we are waiting for our pullback. Now this is a first pullback here. So if we were to take a trade, we'll have looked for another key level again, although that will have been an internal key level. Or if we didn't take this, we could have taken another trade from here again, because it's still our previous key level. You can still take another trade from here, and you'll notice price came back to that level again. That's the same 30 pips. We aim for the high that was created again. You can see right there. That was 1:4.2. See how interesting it is just to trade with price action and market structure. Basically using price action and market structure. So even if we are taking a loss, that would have been fair enough, because we could still take another trade again in the next day, or probably the next session. See, within a day we were able to take 2 trades and they all went in profits. So with just market structure, we are good to go in the markets. Yeah, so if any one of you found this helpful, please make sure to hit the like button and subscribe for more trading breakdowns every single week. Also, make sure you comment below which trading price action, which trading strategy you prefer in the comment section. Alright, bye for now. Peace out.